you ever want to retire off of your investments, there's one very simple hack you need to know about, and it's called rebalancing your portfolio. Rebalancing your portfolio sort of looks like this. When you're in your 20s, 30s, and 40s, you're very heavy in stocks or ETFs like S&P 500 technology and very little in dividends. As you get older, you want to rebalance those numbers so you preserve the money that you've made over your lifetime of investing. This isn't something that you start investing when you're 45 and then you start rebalancing when you're 55. This is something where you start in your early 20s or 30s, hopefully your early 20s if you're watching this video, and by the time you hit 50, you start to trim away from higher risk stuff like tech, which as you'll see, gets extremely beaten up in volatile markets, and into more bonds. I'm going to show you right now. This is just one of many examples based on your individual age, risk tolerance, personal preferences. If you're a more conservative investor, a more aggressive investor, you might want to tweak these numbers or add things like crypto or individual stocks. So this is just the simplest version of technology, S&P 500, and dividends. And these are all also just examples, not advice. There are dozens of tech, S&P, and dividend funds for you to consider investing in. But if you are ages 20 to 40, you could consider being 50% technology, 30% S&P 500, and 20% dividends. And by the way, this is mostly for a different video, but if it were me, I would put the technology in my Roth IRA because that's going to be the biggest growing investment over a 30-year period. And I want to avoid a tax bill on something that could be up hundreds, if not thousands of percentage points over a 30-year period. I'd put these other two in my individual account, which means, yes, I would pay taxes on profits and dividends, but who cares? Once I hit 40 to 50, I would start to trim back on the technology just a little bit, 40%, 30% S&P, 20% dividends, and I'd start maybe considering some bonds at a certain point to start giving myself a little bit more insulation in my portfolio. For the record, I am 39 years old and I have zero bonds, and I have no intention of adding them for my personal portfolio for years to come. But just because I'm the most handsome finance content creator on all of TikTok doesn't mean you should do what I do. Once I hit 50, this is what it starts to look like. 20% technology, 20% S&P 500, 30% dividends, and 30% bonds. The idea here is that I've made all of the money that I'm going to need as I get closer to retirement. And now I want to preserve, keyword, most of it. I'm seeing video after video of people going, should I sell everything? I'll dump 100% and I'll go all in. No, you don't need to do that. You need to move slowly. Rebalance slowly. Maybe when you're 70, you could have 50, 60% bonds in your portfolio, but you still want some growth exposure because why wouldn't you? And most importantly, none of this is financial advice, and no video that you see on TikTok, even ones that come from me, should be taken as such. Because I'm not your financial advisor. I don't know you. I don't know your situation. The buck ends with you, right? You want to learn what's best for you. And here's one way you can do it, and then I'll shut up. Go right here. Click on the menu, which is right here, and everything here is 100% free. There's no email sign up, there's no PayPal, there's no Patreon, there's no nothing. You just get what you want. Okay, don't forget, smash that follow. Thanks for watching. See you later.